First Republic are among the largest bank failures in U.S. history. And experts say more could be at risk. So what's going on, and is your money safe? I'm Layla Maiden, and I cover all things investing and money. Since the 2008 financial crisis, 542 banks have failed. And more recently, in 2024, Philadelphia's Republic First Bank shuttered its doors too.
There will be bank failures, but this is not the big banks.
But why are banks struggling right now? One reason is that they're vulnerable to interest rates, which are at the highest they've been in over 20 years. After March 2022, the Federal Reserve raised rates at the fastest pace since the 1980s to fight off inflation. This means borrowing is more expensive. Mortgage rates are now at the highest in over 2 decades. Business loans, auto loans, and credit card interest rates are also up. And this has really hurt consumers like you and me. But all of this is also crushing the bank's business. Here's why. First, since debt is expensive, fewer people are borrowing from banks, and some are even defaulting, including big-time landlords. Second, some banks are losing depositors who are moving money to high-yield savings account and money market funds that yield as high as 5%. Because let's face it, consumers can benefit from high interest rates too. But this means banks that want to keep your deposits have to pay you more for your money. And third, banks that bought long-term bonds when interest rates were lower are now less valuable because their yield is lower. And let's face it, nobody wants old bonds when the newer ones pay a higher yield. Okay, so banks are hurting right now, but what does that have to do with your deposits? Think of it this way. When you put your money in the bank, they don't just put it in a big pile of cash in a vault somewhere. They use most of it to lend it out and earn interest or invest in other assets. And this is called fractional reserve banking. So your money is not actually in the bank. And this is where problems can happen. A lack of good risk management could cause a bank to be caught off guard when economic conditions shift. And a bank faces the risk of failure when it cannot fulfill its promises to meet withdrawal needs or pay back those that it borrowed from. And this could happen because a bank is losing too much money from loans, investments, or rapid withdrawals, known as a bank run. So which banks are more vulnerable right now? Well, it's mainly the smaller regional or community banks that are facing the most pressure. This is because they tend to be less diversified when it comes to their depositors and borrowers. But these banks provide critical services in small towns and communities. They lend to small businesses, startups, smaller landlords, home buyers, farmers, and all of those people who may have a difficult time getting approved for a loan at a major bank. And when these smaller banks fail, they could be bought by bigger banks. So one example is JPMorgan Chase, which acquired a majority of the assets of First Republic in 2023. The problem is bank consolidation means smaller business owners may end up with less access to banking services, which at the end of the day hurts local businesses and communities. But if you don't use any of these small banks, why should you still care? Well, because it can impact the greater economy. Here's how. If small businesses and startups don't have access to money, it hurts economic growth. And plus, the fear caused by a collapsed bank has ripple effects, like depositors withdrawing from smaller banks altogether. The collapse of U.S. banks in recent years has raised some concerns about major financial challenges. Let's take Silicon Valley Bank, for example. It didn't have good risk management. It lacked a diverse customer base and mainly serviced tech startups and venture capitalists. This meant when business was good, it had a lot of access to cash, which it reinvested into long-term bonds when interest rates were low. But the tech sector is volatile, and when debt became expensive, startup founders faced barriers to funding and borrowing, so guess what they did? They increasingly turned to their deposits. This started a run on the bank, and the bank had to sell bonds at a loss to meet withdrawal needs. This caused a ripple effect because shortly after, Signature Bank faced a fear-based bank run because word got out that it too had tech and crypto exposure and a high volume of uninsured deposits. So during 2022 and 2023, it was actually the tech sector and the crypto sector that were in trouble. But right now, the main sector of concern is commercial real estate, because lower demand for office space combined with high interest rates has made this asset class riskier. In 2024, almost $1 trillion in commercial real estate loans are set to mature. And as they end, some of these loans will need to be renewed in a higher interest rate environment. Whether landlords can afford to keep them is in question. Commercial real estate foreclosures are already up by 117% from last year. This is why some want the Federal Reserve to begin cutting interest rates sooner, even though inflation is still high. It's also why Jerome Powell recently said that banks at most risk will be those that have high exposure to commercial real estate loans and high exposure to uninsured deposits. And so the first bank failure of 2024 was Republic First Bank, and that's because of its commercial real estate exposure. Now, the stress on banks this time around isn't as bad as it was in 2008. Since the financial crisis, regulators have more experience managing risk and contagion. And on a positive note, data shows that less than 7% of bank failures since 2007 resulted in losses for uninsured depositors. That said, here's what you can still do to protect your money. First, make sure your bank offers FDIC-insured deposits. That's the U.S. agency that insures up to $250,000 in your account in the event your bank does fail. But if you have more than that, consider splitting the accounts into a checking and a savings account, or under different ownership categories, such as a business account. You can also move it to a different bank to keep deposits under the insured limit. Overall, predicting if a bank is going to fail is difficult, but remaining informed and asking questions to your bank is one way to keep our banking system safe.
Yeah, man, it's sad to hear like a lot of small banks that might be closing because you know how the economy is and everything, and the lady who was talking about, she was really breaking down what she was talking about, how to save your money and everything. But go ahead, Hakeem, what's your take with with these small banks closing down, which may impact small communities?
Economically, we've seen this happen. When you don't see businesses being loaned to, you don't see a lot of businesses coming up. I've read about this. I've seen this trend. Synchrony Bank wasn't and my apologies, Silicon Valley Bank wasn't the only one. There was other smaller banks that was getting eaten up. Even here in Miami, a lot of the Bank of Americas had closed down in certain areas. So you can gradually see a shift, and this is going to hurt the economy even more. We just got to be smarter with our money. Where do you invest at? Do you keep every money in there? We learn now you got to diversify your bag. Don't just put your money all in one account. I got crypto. I got money in stocks. And if you're smart and if you want, go buy a property. Get you a cheap property somewhere and let your money work for you. Not all of it is good to sit in the bank.
And that's one of the issues we're having in America. So the problem is because during the pandemic, even though Trump, a lot of people have stimulus checks. Stimulus mean you were supposed to stimulate the economy. So the money they was giving you, you were supposed to pretty much put back into the economy. Now, when it comes to the aspect of these banks, especially small banks, banks survive off interest rate. If people not taking loans out for homes, if people not taking loans out for school, if people not taking loans out for businesses, it hurts the banks. That's how they make their money. They make their money off loans, off interest rate. That's why some banks, if you go and try to get a home today, some interest rate is very high based off your credit. If your credit is very low, they might overlook it and might give you a higher interest rate than someone that have a very high credit. So that's why it's very important, especially for these smaller banks, to know, okay, how can we better the consumers so they could come here, get the loan, get the interest rate so we can survive. And not only that, but also you have big banks like Bank of America, JP Morgan, you got Wells Fargo. All these big banks are coming in and taking out the little banks, meaning they going buying the little banks out because they know nobody's going there, because people always go to the banks that's very well known. Like, for example, I go to Bank of America a lot. However, Bank of America still, mind you, this is my own personal opinion. They savings account is not that good compared to American Express. Remember, this all personal opinion. So guys, make sure you go and do your due diligence when it comes to the
It's
aspect of
not
financial
financial
advice.
advice.
You know what I'm saying? So this is all personal opinion. I'm just saying, instead of going to American Express, what does offer a great savings rate about 4%, which kind of close beat the rate of inflation. You want stuff that consumers are looking at stuff like that, so they're taking their money out of smaller banks and putting their money into those type of banks that offer great interest rate for your money. Pretty much your savings account is literally making money for you than some of these other banks that it makes no money at all. And not only that, but the online banking is on the rise. And one final point, I do agree with Hakeem. Make sure your money is working for you. I learned this from a wise man. Do not leave your money in the bank. If you got over 10K in the bank, you better make sure that 10K is making you over a lot of money. You can put your money into the crypto, you can put your money into stocks, put your money into some small investment. Hell, you can even put your money into some land, because now, especially when you got places like Miami, Houston, New York, LA, where they're doing strong innovating. Put your money there, make some money, because hell, time is money, and hell, your money should be making money for you. But go ahead, Jordan.
Yeah, exactly. And I want to say this, it's very sad to see, small banks, also credit unions. And the reason I want to say credit unions, usually if you want a loan, like a house loan, personal loan, anything, you usually get a lower interest rate if you go to these big banks like Bank of America or Chase or US Bank, something like that and everything. And I feel like it's very important, if in the smaller cities and everything, you have a local small bank, a local credit union and everything, it's, make sure, you touch those type of banks and everything. Because if you go to, a big bank, it's hard, especially if you're black, it's hard to get a house loan. It's hard to get a personal loan or a car loan or anything like that and everything. Also, your job and everything. Usually a job, they're close with a bank. Usually a small bank like my job, we're with the credit union with the union and everything, and they help your workers out to get like a car loan, a personal loan, or a house loan and everything. So I'm just saying like credit unions are a little bit more useful because they give lower interest rates or any loans you get and everything. And I feel like it's very, very important, to keep those type of banks out there because, I think, a lot of, young folks, we see Chase banks, we run around all the time, big cities or small cities or Bank of America or Wells Fargo, so U.S. banks and everything, which is cool and everything. But if you want to, start getting loans and everything, once you have money saved or anything, it's important to have small banks and everything to keep the economy and stimulate, especially small communities and everything. And like I said, and what we just heard and everything, yeah, I agree with the lady. I agree with you guys. Don't just keep your money in one account. If you got a checking account, savings account, or invest in stocks or bonds, make sure your money is all over the place. Because you have money in one big pot, and something happens to a bank, that's done diddle right there. So yeah, this be like I said, more we try to say is, just be smart with your money and everything. Let there's a lot of options out there that you can go invest and also save your money. Bank is just number one. But there's other things you can do that can save your money and everything. And going back to to banks that will help you out and give you like lowest interest rates. Usually smaller banks, and also credit unions will help you out, a little bit more and everything. Even though our economy is hectic right now, they'll still give you the best option than big banks like Chase and Bank of America.